Your credit card company is not your friend. They are a silent partner in your bank account, waiting for you to trip up so they can take their cut. Most people think they're winning the points game, while the banks are actually playing them like a fiddle. Wake up. You're being farmed for interest, and it's time to stop being the crop. Fact 1. The minimum payment is a trap designed to keep you in debt for decades because it barely covers the interest. If you owe $5,000 and pay the minimum, you'll be paying for 20 years and end up spending $15,000 total. Always pay the full statement balance, not just the minimum. Fact 2. Credit limits are increased not because the bank trusts you, but because they want you to increase your spending. They see you're responsible, so they give you more rope to eventually hang yourself financially. If they raise your limit, keep your spending the same, or manually lower it back down. Fact 3. Using more than 30% of your limit kills your credit score, even if you pay it off every month. Banks see high utilization as a sign of financial thirst or desperation. To fix this, pay your bill before the statement closing date, not just the due date. Fact 4. Reward points are psychologically engineered to make you spend 20% more than you normally would. You'll buy a $100 pair of shoes you don't need just to get 200 free points worth $2. Ask yourself, would I buy this with cash? If the answer is no, the points are costing you money. Fact 5. Your credit score is actually just a debt score that measures how good you are at making banks money. It doesn't track your net worth or how much cash you have in the bank. You can have $1 million and a zero credit score. If you think the system is rigged, hit that like button and subscribe right now. We're just getting to the dirty secrets. Annual fees are almost always negotiable. You just call and threaten to cancel. The bank spent $400 in marketing to get you as a customer, so they won't lose you over a $95 fee. Tell them you're looking at a competitor's no-fee plan. What's the highest annual fee you've ever paid? Tell me in the comments if it was actually worth it. Carrying a balance does not help your score. That is a lie spread by people who don't understand math. Paying interest only helps the bank's stock price. Your score cares about history and utilization, not how much interest you've gifted to a billionaire CEO. Store credit cards are the worst financial products in existence because their interest rates are often double a standard card. That 15% discount at the checkout counter costs you 30% in interest if you don't pay it off instantly. Just say no at the register. Cash advances start charging interest the literal second the money leaves the ATM. There is no grace period like there is for purchases. Avoid this at all costs. It's the most expensive way to get cash on the planet. Late fees are just the beginning. One missed payment can trigger a penalty APR that jumps your interest rate to 29.999% indefinitely. Set up autopay with a minimum amount at least, so you never miss a dip by accident. Seriously, has anyone here ever been hit with a 30% interest rate? How did you get out of it? The grace period only exists if you have zero balance from the previous month. If you carry even $1 over, you start paying interest on every new purchase the moment you swipe. Clear the debt every month to keep the interest-free hurt. Credit card insurance, life disability, it's a massive rip-off with so many loopholes they rarely ever pay out. It's a high-margin product for the bank that gives you a false sense of security. Cancel it and put that monthly fee into a real emergency fund. Closing an old card can actually lower your credit score because it shortens your average age of accounts. Even if you don't use it, keep it open and put one small subscription on it. Do you still have your very first credit card? Rental car coverage on your card is usually secondary, meaning you still have to file with your own insurance first. Don't assume you're fully covered until you read the fine print of your specific card benefits. Banks track your internal score, which is different from your FICO score. They know where you shop, what you eat, and if you're likely to go bankrupt before it even happens. They are watching your habits more closely than you think. 0% APR offers often have deferred interest traps. If you don't pay off the entire balance by the last day, they charge you interest for the full amount from day one. Mark the expiration date in red on your calendar. Pre-approved offers in the mail are just marketing, not a guarantee. They haven't checked your credit yet. They're just fishing for new debtors. Shred them immediately to prevent identity theft. Foreign transaction fees are a 3% tax for no reason other than you being in a different country. Get a no foreign transaction fee card for travel, or you're literally throwing money away at every meal. If you're a victim of fraud, you have more protection with a credit card than a debit card. With debit, your actual cash is gone while the bank investigates. With credit, it's the bank's money that's missing, so they work faster to fix it. Identity theft. Protection services sold by banks are usually just rebranded versions of free services. You can freeze your credit for free at the major bureaus yourself. Why pay the bank $15 a month for something that takes 5 minutes to do for free? Business credit cards often don't show up on your personal credit report. This is a pro move to hide high utilization if you're running a business. But remember, you are still personally liable for the debt. Credit card companies sell your anonymized spending data to hedge funds and retailers. They know exactly what people are buying before the government reports come out. You are the product, not the customer. Balance transfers usually eat up most of the savings you get from the lower interest rates. A 3 to 5% fee on a $10,000 transfer is $500 paid up front. Do the math before you move your debt around. Authorized users can build your credit, but their bad habits can also ruin yours. If you put your teenager on your card, their maxed out spending reflects on your report. Choose your circle wisely. The fine print changes all the time, and banks only have to give you 45 days notice. They usually bury these changes in boring emails you never read. Always scanning for the word rate or fee. Credit cards make more money from swipe fees paid by merchants than they do from some customers. This is why small shops hate it when you buy a pack of gum with a card. Does anyone here still carry cash for small shops, or are you 100% digital? Applying for too many cards in a short time makes you look like you're about to go broke. Space out your applications by at least 6 months to keep your score healthy. You can change your payment due date to align with your payment. Just call an app. This simple trick prevents timing issues that lead to late fees. Premium metal cards are just a status symbol designed to make you feel important, so you don't mind the $600 annual fee. It's heavy because it's meant to weigh down your wallet, literally. The best way to use a credit card is to treat it like a debit card. If the money isn't in your bank account right now, don't swipe the card. Simple, but 90% of people fail at this. At the end of the day, credit cards are tools, like a hammer. You can use it to build a house, or you can hit yourself in the thumb. Use them for the protection and the rewards, but never, ever pay them a cent in interest. If you found these facts useful, you'll definitely want to check out our other video on the secrets of the banking system. Thanks for watching, and stay smart with your money.